Hey, you know what? You should ask Ty. He's got this little thing. He's got 4 cameras going at one time. See if he can't get one to you.
Let me just pop it up a little bit. Oh.
It will just keep.
Okay.
Oh wow, you guys look really. What do you need my help with? Nothing.
Just to be great.
You know, greatness awaits you.
Lewis Howes is one of my investors, by the way. He invests with
Lewis
us.
is a good.
Lewis, why did you invest?
You got 250. You got to give him today.
Why'd you invest with me?
Because I want to make money.
That's exactly it. Put his
Larry, you put money in yet?
We're going to.
When? I want to come in.
Right now.
He's scared. He got scared.
He is scared.
He's got scared money.
Oh my
scared
God.
money.
Scared on his face.
You Jewish, right? Yeah. You know, the Jews, they either run really freaking hard at it or they run scared. It's nothing in between.
Oh my God. There's nothing like a Grant Cardone interview. Okay.
Dude, I'm just saying. It's true. You know, every holiday we have is because some Jewish guy came up
Did you
with
wish your Jewish friends a Happy New Year?
Dude,
it's Rosh Hashanah.
What do you mean? I was at a Rosh Hashanah party yesterday.
Shit. How come you didn't invite me?
Tenenbaum.
You didn't even invite me. Dang. How was the matzo ball soup good?
It was delicious, dude.
All right. Okay. All right. So this is Larry Benet, and I have the good fortune. I'm with Grant Cardone. Over the years, I've had the good fortune.
You're supposed to keep that thing close to your mouth, though.
Are you serious?
I'm telling you, man.
Am I really?
I've been using that line for
Okay.
years.
So over the years, I've had the good fortune of really connecting and interviewing and having some of the most amazing both entrepreneur and world-class thought leaders on my stage. Everyone from Tony Robbins to Tony Shea of Zappos to Peter Guber, the Golden State Warriors. This guy is an absolute beast. I'll tell you a couple things I respect about you. So if you're not familiar with Grant, number one, he's one of the top 5 social media influencers in the world right now to entrepreneurs. Sales training is incredible. But what really impresses me, you've built a $550 million empire of commercial real estate part-time.
Yeah.
And most of it off your own money, which
That's
is
right.
phenomenal. All right, so what I really want to find...
One deal at a time. We didn't raise any money. It was, my first deal was I bought a house, single-family house. I rented it. It was $78,000. I rented the house, and I was so happy, dude, for like 8 months. And then they moved out, and I was like, oh my God, I got to make the payment. So everything I had made in the first 6 months went away in the first month. And I move really fast when I make mistakes. So I sold that house and realized the problem was not real estate or the rentals. The problem was that I didn't have enough doors. I was too dependent upon one door. And so my next deal was 48 units. My second deal was 38 units. My third deal was 92 units. Now my first deal was 78,000. My next deal will be $78 million. So the more doors, the more you get. It is the perfect diversification model.
Yeah. So let's talk. There's probably sophisticated investors,
Yeah.
but there also could be entrepreneurs that make a lot of money. They don't have no
If they're
time.
sophisticated, though, how they're going to feel about your shirt being untucked?
Oh my God, you're killing me, man. You're killing me. All right. So
The answer to that question is sophisticated investors don't care how you dress as long as you give them a return.
that's right. Like you said, no one ever asked a billionaire what his closing ratio was.
Exactly.
All right. So on a serious note, let's talk about philosophy and strategy.
Okay.
Your philosophy towards real estate investing.
Yeah. So number one, we only buy one product. Okay. The product we buy is very, very specific. Mark Cuban says diversification's for idiots. And I believe that. I would add to that, I think diversification is also for people that just don't know what they're doing, and a mythology that was created by Wall Street, so you become dependent upon Wall Street. Okay. You'll also hear your parents say that real estate is, a lot of trouble. Real estate's a lot of trouble because you only own a 2-plex, a 4-plex, or an 8-plex, or a single-family home. Of course, it's a lot of trouble. You're the only one that gets phone calls because those properties, an 8-plex or a 12-plex, that you own 100% of, it doesn't produce enough revenue for you to have a manager. We buy complexes that these are apartments only. We don't do storage. We don't do office. We do not for sure do retail. Shopping centers or no. Anything. We don't do CVS's. We don't do Walgreens. I don't do triple nets. I do one product.
So earlier, me and Scott Duffy were talking.
Yeah.
And you were talking about all these things are getting
Yeah.
the technology. There'll be robots, or
Yeah.
there'll be things disintermediated. But you're saying everyone will always need a place to live.
Yeah.
And your philosophy
Look. I work so hard for my money.
Yeah.
Okay. And the people that are investing with me, They work their ass off every day. This is what the common investor has. Then I'll talk about the investment. They work their ass off. These are typically very high earners that are investing with me. Many of these people know me. They've watched my whole career, but they don't have time. Okay, they don't have time. They love real estate. They love residential. They love the apartment play. They like the cities that I am that we can talk about. But mostly they do it because they're like, dude, I don't have the time to do this. I barely have time for my business, to grow my business and my family, and for me to go out and find deals, manage deals, buy deals, finance deals. It's a whole new business. So the deals, let me just go back to the deals we look at. Okay, first of all, they're all multifamily. They're all in positive job growth markets, even though, by the way, a negative job growth market would not bother me. In fact, could be good for apartments. The demographic, the reason why we're doing apartments, $1,100, $1,200 a month rent, some markets $800, no government housing, and nothing brand new. Okay, no $4,000 a month rents. So we're looking at a sweet spot. That's never been talked about. There's a shortage of affordable housing in America. They in the last 5 years, while you see a lot of cranes in the air in Denver and Chicago and Miami, Los Angeles, San Francisco, New York, you will see no cranes building $1,100 a month rents. You cannot build apartments that rent for $1,100. There's a shortage of it. Nobody's talking about it. That's all we buy. When a recession comes and another one will come, the guy that's living in $4,000, the first thing they do, Larry will call up his buddy. Hey, man, you want to split the rent here, dude? And they'll split. And then they find out they hate each other's guts, and then they'll both go their own way, and they're both going to end up renting probably a place for $1,800. So that's kind of the focus of our product. Okay, in markets that have barriers to entry. Yep. So like we're looking at Houston right now, San Antonio, anywhere in Florida.
Why are there barriers to entry in Houston, San Antonio, or some of the
markets? Because different reasons. Okay, first of all, you can't in all those markets. The one common theme is they can't build affordable housing. You cannot build a brand new project today and rent it for $1,100 and make money. Okay, it's impossible. It just financially doesn't work. Okay, cost of materials is going up, cost of labor is going up. This dude Austin sitting right here, he has no interest in buying a home. By the way, he can't afford one if he wanted to. So, and he doesn't want to. He just wants to rent for 10 months and move on. Also, we have 80 million baby boomers, people my age, that have already owned a home. They're like, I'm good. I don't need to own a home. I've already owned that. I have that story.
By the way, what is your philosophy? We're in a gorgeous...
Yeah, I rent everywhere I go. I rent everywhere I live. I rent.
What's your philosophy behind it? It's interesting. I've never heard it before until you said it, and it's fascinating.
Use it, and move. Like my ideal place to live is a different place every 3 months, and I have 2 little kids. So you guys that have kids are like, I couldn't do that. I got kids. Quit blaming your kids. The ideal way to live on this planet is to go where you want, when you want, how you want, and the only way to do that is not with a job and not with a business. It's with passive income. So today we own 4,000 apartments. They all have one thing in common: $1,100 a month rents, positive job growth markets, barriers to entry, can't be replaced. Somebody can't pop up a building and compete with me next door. And by the way, let me just say this: I've worked my ass off so hard in my first 4 companies. I don't want to lose money. So these are properties. They're not going to lose money.
You've never lost money.
I've never ever. I've made a lot of mistakes in real estate. I've never lost money in real estate ever. They're cash flow positive the day we buy them. So, like, I'm not buying Orange County or Los Angeles.
Didn't you say in order for you to make money, you'll go look for 100 different deals or as many as you need to find the one deal?
We look at over 100 deals to buy one deal.
And you're flying on your private jet all over the place just to source.
Extremely disciplined. Look at a lot of deals. So we're going to Houston right now. Probably looked at 9,000 units already in Houston to buy my first 500-unit deal.
The other thing, which I think is interesting.
By the way, the 500-unit deal that we're buying in Houston was off market. Not available. I had to contact the owner, which is one of the biggest residential multifamily owners in the world. Had to get in his office, put an offer. I'm probably overpaying for it, by the way. Okay, I'm overpaying for a deal. Most of you wouldn't buy. We're basically making extraordinary deals available to ordinary people.
Yeah, I was going to say, one of the unique things of investing with you is not only is your social media profile, you're on TV everywhere. Yeah. You've been doing this for a very long time, and because of the relationships, you're getting these off-market deals, so the average person will never be able to have that opportunity. And
yeah, well, even if like you had them, this particular deal I'm talking about is $86 million. I think on this deal, I'm going to put $30 million down. I think on this deal, I'll end up making, I believe I'm going to make $86 million. So it's a win, though. Okay, now this deal, the ordinary person, if you're buying your first real estate deal, it's not going to be $86 million.
Now, if someone wanted,
But it could be with me.
if someone wanted to,
Larry's first apartment deal
would be with you.
could be with me at $86 million. It's a fast track, okay? Why would you want to be in an $8 million deal when you could be on an $86 million deal? I'm signing the debt. You're not.
And why would I want to learn real estate when you know it and you're the
Yeah,
expert?
I got my money in the deal.
Yeah.
I got my time, my energy. I'm buying the deal whether the investor comes along or not.
Right.
Okay, so I've been doing this 25 years. My brother came in and said, "Can I invest with you?" I'm like, "Dude, I just don't want any headaches. You know, I just don't call me and ask me a bunch of bullshit. You want to ride on my deal, ride, okay? Our fund was created identical to what I do for my brother. So the deal you get with me is the exact deal my twin brother gets."
The thing I like about you is even with your own family,
Yeah.
you're like, you treat your money like their money, and it's just been very interesting.
Yeah, all money.
Wall Street investors are like this. They don't always
Look,
care
look.
about
We
that.
don't. I don't charge the plane. I had the plane before I opened the fund. I had the plane before I did the real estate. So I don't charge. If he drops $20, I'm picking his $20 up and giving it. This is what my dad taught me. Look, if you will misuse somebody else's money, you will end up never having your own. And so it doesn't matter to me whose money it is. To me, money is money. Like, you earned it. It's yours. I'm gonna. Hey, no, here. Hey, you know, because if I respect your money, I'll be able to respect mine. You can't turn it on and off, right? So in the real estate game, like, I don't rob deals. We don't overfee deals. I go look at 100 deals. I don't charge you for the 99 I looked at and we didn't buy. Okay, I'm looking to score on one deal.
Yeah.
Okay, and it takes a lot of discipline. A lot of discipline. People are like, "How do you pick your deals?" Dude, what you should be asking is, how much discipline do you use in picking a deal?
And the nice thing is, if someone's an investor, you're the disciplined guy doing all the work, all the heavy lifting, and you have other advantages.
Just look. You guys that want to buy real estate, you know, pick any market. If you're in New York, you're not going to Houston because you can't be there. So the problem with the New York investors, they're stuck in New York, right? So it's good when the cycle's good, but it's terrible when the cycle's bad because you can't buy anything. You can never get out of your state. I've always been able to get out of where I live. You want to be able to move your money to the markets that are good, and you can't do that if you don't have a business, number one. Number two, just do a little test run. You want to buy something in Miami or Tampa or New York or Chicago, pick any city. Pick up the phone and say, call any major brokerage firm. I'll give them to you right now. HFF, CBRE, Cushman Wakefield, ARA. Those are the four. Maybe there's five. You know, I don't know. What's another one? JLL. Call any of those 5 or 6 guys. I'll guarantee you, I'll bet you $1,000 they don't even call you back because they don't know you. And if they don't know you, they're not going to send you a deal.
Just
And if you can't get sent a deal, look, real estate's about deals. It's not about cap rate. It's not about cash flow. It's about the deal. There's got to be something about that deal today. It's not about price, by the way. Buy low and sell high. That's bullshit in the game I'm playing.
So what was interesting is I was talking to a very successful real estate investor today. He said it's hard to find deals. Yeah. And the thing is, you're able to find the deals, A, because your network, B, you've been doing this for a long time, and B, you're getting off-market deals.
And I'm willing to go to other markets. He can't find deals because he's
in maybe one market.
He doesn't want to move,
Yeah.
right? Can you just hit the yeah, there you go.
If someone's not familiar with you, just talk about your philosophy about money. So before we were doing this, you were talking about who's got my money. And the way you were talking about some people are in it for the long haul. You're talking, just talk about your philosophy.
No, number one, never lose money.
Okay.
Number one, never lose money, period. Like, you don't lose money. You work so hard to make it.
Yeah.
I don't bet with money. So if you ever see me in Vegas playing at the Wynn, you're going to see me playing $25 chips. I might have a higher net worth than everybody at the table, and I'm the punk player. I got my buddy Howard. He's playing $5,000. The only way I can sit at his table is because they made an allowance for me to sit at his table, so he'd play $5,000. Now he thinks I have big balls because when I buy a deal, I put $20 million down. He's like, "You got the biggest balls anybody I know." I'm like, "No, Howard, you're the one with the balls. You're betting $5,000 on 2 cards. I'm betting $20 million on a piece of property that has a business on top of it that cannot be destroyed no matter what happens on planet Earth, no matter what Kim Jong does. I mean, short of Kim Jong, Rocket Man,
But they still need a place to live.
People need a place to live. Even after nuclear devastation, people will be like, I got to go to my apartment. So short of that situation, there is no artificial intelligence, no robot. Robots will disrupt automotive. They will not disrupt multifamily. So number one rule is make money, work your ass off to get it. Number two rule, never lose it. Number three rule, make sure it pays you every month. I want to be paid every month on every investment. So I don't buy stocks. I want dividends. I don't want it every quarter either, like AT&T gives it to you. AT&T doesn't pay you every month. We pay you every month. The reason I want to be paid every month, even if it's a drip, is it reminds me I have that investment there.
Awesome. Last question. When you say who's got...
And I want to be guaranteed appreciation over time, okay? I don't want a clock. I don't want a clock, tick-tock, tick-tock. I got to sell it. I don't want to be in a REIT, okay? Because a REIT is a piece of paper.
What's the difference between a REIT and what you're...
A REIT is a piece of paper, okay? The real estate that we invest in, you are a partner in a physical address that has a business on it where people will walk. You can literally go to the business. When you buy a REIT, there is no property to visit. So that's Blackstone. Blackstone is going to, this is what would happen with a Blackstone. Blackstone offers a REIT. You invest in the REIT. Blackstone calls me and says, can we invest in your property? Right. So I'm basically taking Blackstone out of it. And going direct. Me and you build a big business. I scale out to 20 or 30,000 units, and Blackstone comes back in and buys me anyway. And
your partners would share in the profits.
Yeah, exactly. So, and the partners would share in the profits. So that's my play on this deal.
Gotcha. And just last thing,
there's never a last thing, Larry.
I've learned a lot from you just about money. Yeah. So when you say who's got my money, what do you mean about that? Because like we were talking about that before. Yeah. That's pretty interesting.
When it comes to real estate, I mean, one of the things we do is we put all my sales philosophies in place in an apartment building. So when somebody walks in to rent an apartment, everybody stands up. Who's got my money, man? They do. Okay. So we treat customers like money. We don't care about their credit score. How do we get the credit fixed? Okay. Who can endorse it? Okay. Yeah, you went to jail, whatever. Like, we don't have those kind of problems, but we don't treat people like, oh, you're bothering me at 5 o'clock. Who's got my money is the philosophy. Who can fill up this property? Who's going to pay our debt down? Who's got my money is who's paying down my $400 million worth of debt. Because in my real estate, like, we're sitting on about $400 million worth of debt right now, probably. Okay. Dude, all I got to do is sit. It's just when is that paid off? I'm not paying it off. They're paying it off. They're paying it off. Okay. So at the end of the day, we have I got $580 million worth of assets today. All I got to do is wait 30 years. 30 years from now, it's worth $580 million. Bang. I have no debt. Okay. 30 years from now, will the rents be higher than they are today?
Yeah, absolutely.
Might be. So 1,100 is not 1,100 anymore. It's 3,000. Okay. I owe nothing on it. You know, it's a beautiful thing, man. So what's that property worth now? Is it worth $1 billion? I just don't want to wait till I'm 80 to be a billionaire, because Lewis Howes wants me to be a billionaire this year.
That's right.
So look, the way the investors get to play in this deal is this. Number one, you help me scale, and I'll help you be in real estate. It's a win-win, okay? You give me your money. I'm going to put it alongside my money. In a deal, we're not selling that deal for probably 6, 7, 8, 9, 10 years. It might be 12 years, but I guarantee you this. When we sell, we're selling for one reason, because we're making bank, okay? My target return is 100% on the equity, 6 to 10% a year. At the end of the fund, by the time we sell out, I expect you to get 160 to 200% return on your money.
Awesome. So I was just at his house. He had about 75 real estate investors here, but a lot of them were already invested with him. They were very happy. So let's see, what is it?
Cardone they know when the 27th of the month is, because that's when I send them a check.
Cardone Capital, CardoneCapital.com, and
we should get Larry so we should get Larry a link though.
We'll get you in touch with Captain Ryan or Grant or
or we'll figure out how Larry can answer all the questions. So you know, what we do is we get Larry invested in the deal, and then Larry can organically tell you I'm invested. That's the right way to do this deal, Larry. You know, you don't tell somebody about having sex with a man. You have sex with a man. Then you don't have to sell it, Larry.
No eye contact, guys. No eye contact.
Yeah. You looked at me a little long there, Larry. Okay, you've been thinking about it, haven't you?
All right.
It's all good, Larry.
All right, so
it's an experiment, Larry.
I hope you enjoyed this, and we will to be continued. May you connect and grow rich. Have a great day. Awesome. All right.